Hi everyone, I hope you're all doing well, and today I'm talking about the 4 stocks that I bought this week. And as always guys, if you can smash the like button, subscribe if you're new around here, that'll be absolutely amazing. And I'm not sure about you guys, but I feel like the red pen is kind of on the way out. Might be the next one to get chucked in the bin, but we'll try keep it for a few more days. So we're going to take a look at the 4 stocks that I bought this week, 4 stocks that I currently own. So I was adding into positions that I already have, and when I was buying into these positions, I was increasing my positions probably about 10%. So not a huge amount that I was increasing them by, but still just topping them up nicely. And all 4 stocks I've talked about quite a lot in detail on the channel. So if you want a bit more information, there's plenty of videos out there on my channel, so go check them out anyway guys. And if you want to keep up to date with the stocks I'm buying, when I'm buying them, join my Patreons guys. I always post what I'm buying, what I'm selling. There's also a cool series on there where I'm actually reviewing people's portfolios at the moment, and also there's a nice little Discord group on there to chat to other investors. So like I said, I'm only going to spend like 2 minutes on each stock because I want to get through them and I don't want the video to go to like an hour's long. And so yeah, I'm going to only spend a little bit of time on them, but there's quite a few videos out there in depth about these companies that I am talking about. So we'll start with number 1, which is HUYA, and I've not talked about this company for buying reasons for a while. I've talked that I wanted to buy them, but I've not been able to buy them because the stock's been up quite a bit. But recently we've seen a bit of a pullback, and with that pullback led me to have a good opportunity to go at last buy some more shares in this company. And HUYA is a company that I wouldn't mind being in a nice big position in my portfolio. It is a Chinese company, so it will give me some, obviously there's a little bit of risk there. People don't like Chinese companies, but I like them, I'm a big fan of them. I made good money off them before. With JD.com, I made 300%. With Alibaba, made like 60-70% on that one, and currently still up as well on them 2 positions with the shares that I do currently have. So Chinese companies are a big favourite of mine, and like I say, it gives you kind of another kind of opening into a different market as well. But yeah, I'm a big fan of HUYA. So the reason why I bought into this company is first of all the revenue growth and the profit growth. This company is going to be growing massively on the profit side, and also it's going to grow huge on the revenue side. It's growing about 30% on the revenue side. Now normally when a company increases revenue and profit, the share price doesn't stay where it is. It doesn't normally go down either. Normally, eventually, it might take a little while, but eventually if the company has a decent valuation and its revenue and profit grows, the share price moves in the right way with it. And the valuation on this side of the company as well for HUYA, very cheap. It's trading at a P ratio of about 22, which is very cheap for a company, as some of you guys know, for a company that's growing 30% revenue growth. As well as that, amazing balance sheet. It's got a clean balance sheet, so that's a great thing. And just because of the area it's in, it's kind of in the streaming side of it. We have the new generation of consoles coming through. There'll be a lot of new game titles that come through. That will mean more people will go to these streaming platforms. They'll also be streaming a lot more of the new games on the new consoles. So it's a win-win scenario. And also naturally with the esports growth and the amount of esports that is going on, it's just going to lead this company to do really, really well. So for me, when I look at HUYA, the next 2-3 years, it's going to be a company that I expect to get 100% return from, and I see some fantastic things from this company. Number 2 is a company that the Fluffy Panda, or the Pink Unicorn, is going to not like me talking about because I apparently get paid for this one, but we are going to talk about it. It's a company called LORDSTOWN Motors, and basically this is a bit more of a spec stock because it currently has no revenue. And basically what they're going to do is in the next year they're going to start releasing, probably it depends on them and the Cybertruck, the first ever electric pickup truck, which is a massive market in America. There's a lot of growth potential here for this kind of company, and I think when you look at the numbers that they're going to produce and how quick it can get to profit, it's going to do well. It's got the obviously the old GM plant, which will help with the production side of it, and they've also got a nice pre-order list on the company as well, which current model that they do have out for pickup truck could be quite successful for them. And like I say, I think even though it's a spec stock, it's a good spec stock that I like to have in here. I don't want it to make up more than 10% of my portfolio, with it being a spec stock. So yeah, I do want to keep adding into it. It's going to be a very volatile couple of months for it. It's going to be a company that has days where it goes up 10% and then the next day it can go down 10%. And hopefully when it does have them sort of days where it goes down the 10%, it'll be a time where I'm able to pick up this company a little bit cheaper and keep getting that average into a good place. Number 3 is Gang. So I've talked about it a lot on the channel, so I'll keep it nice and brief, but obviously you know I'm a big fan of this one. A company that is very rare, growing at 100% revenue growth. says it all, doesn't it? 100% revenue growth. The valuation isn't too bad on it. It is just about getting to profitability. It's been in and out profitability, but over the next kind of 2-3 years, I see this doing well on the profit front. LORDSTOWN Motors and Gang are like the stocks in my portfolio right now, which are the 5-year hold companies. They're ones that I'm holding for a longer time frame. Gang is going to do well because of how many states are going to allow online gambling, online casinos, signing some great partnerships at the moment, and it'll just see the revenue go up, profit go up. Great balance sheet as well. Management team have done really well, this company, and for me, when I look at Gang, it's a great area that it's in, a massive growth area, probably, you know, one of the biggest growth areas that are out there right now, and it's that good of a growth area. I'm actually considering another stock in this area right now, so we'll see what happens. But yeah, Gang, I wanted to buy this one actually the other day, but when the win kind of information came out, it meant the shares popped like 20%, and I was like, oh, so I cancelled my buy order, and then the next day it kind of was a little bit down, so I was like, I'll just buy it here. So yeah, I bought it a little higher than what I wanted to do, but still I'm happy because, like I say, 1 or 2% in a 5 years time won't make much difference when this stock's up over 100%. And the last one is Dropbox. So I kind of said an honourable mention in this one on the 3 stocks I'm buying, and yeah, I did go and buy it. It's kind of it was kind of nearly where my average price was. I did average up just slightly. I think it was like 3 or 4%, but I've been thinking that this is kind of getting, you know, when I started buying this one in 2019, and when it was at 2019 prices at this level, I was like, this stock's really cheap. And now we add another year in with that profit coming in, revenue coming in, and the stock's even cheaper really now than when I bought a year ago. So I was like, this is crazy. I think just because it's not called Google or Microsoft, it's a bit disrespected. But you look at the valuation now, the growth it has, it's great. It's a great valuation. And at some point, if Dropbox carries on doing what it's doing and just does its thing, at some point that share price is going to move up from here, and it'll start going up quite a bit. And like I say, Dropbox for me is a company that I feel like will offer some really good returns eventually when people wake up and see like how good of a company this is. And it's, you know, been doing its own thing with Google, Microsoft. You know, people have always said that they're going to come in this area, they're going to kill Dropbox, but it's been doing its own thing for like the last 10 years and it survived it. So and it's done really well. So I mean, at some point, I think Dropbox share price will kind of get back to where it should be. So we'll see what happens there. But yeah, overall, those are the 4 stocks I bought this week. I didn't buy anything on the UK front. I was close to buying a little bit of Hollywood Ball, but I didn't. So yeah, hopefully, I think these are all good purchases. We'll see what happens next week. Where the stock market goes, we might see me buying. I might hold off next week. We'll see. If I do buy though, I will update you as always. So I hope you enjoyed the video about the 4 stocks that I did buy this week, guys. As always, smash the like button, subscribe if you're new around here. I'll see you next video.